Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Hello, good morning. Welcome to Bazaar Morning Call. I'm Sonia Shenoy, and with me, as always, is Anuj Singhal and Reema Tendulkar. It's the last day of the trading week, and we had a very good day yesterday. The Sensex was up more than 350 points, and this morning as well, we wake up to positive cues. A couple of them actually will take the markets perhaps higher as well. One is the 7th Pay Commission recommendations, which is higher than what the street was expecting, the 24% hike in the government employee salaries. That, of course, will be very good for consumption. We'll talk about that in greater detail in a bit. And the second is the GST revenue neutral rate, which if it comes between 18 to 20% as our sources are suggesting, then the market will react positively to that. Of course, there will still be various slabs. This could only be the central rate. So on a state-wise level, there could be slabs. But nevertheless, this rate is lower than what the market was expecting on the whole. But more on that in a bit. Market, of course, has been in very good terrain. Reema?
Yes, indeed, Sonia, but we've stopped exactly at the resistance level of 78.50. And now the question which we're going to ask Anuj is, do you think the internals look strong enough for us to surpass this level and perhaps head higher, maybe to levels of 8,000, considering we're close to expiry?
Morning, Reema. I think yesterday was extremely good and extremely as per the the script. The market opened with a gap up, then corrected a bit, and then had a big intraday surge and moved towards 78.50. And what was the best part about market yesterday was that it was broad-based. There was not a single stock which contributed more than 20 points, and still the Nifty went up 110 points. And if you look at the advanced decline ratio, not the overall advanced decline ratio, the F&O market advanced decline ratio, that's always the best barometer of trading sentiment. It was around 9:1. 9 F&O stocks were up for every one stock that was declining. That was extremely good. My sense is that if the market opens a bit lower because of global cues, that's a good buying opportunity. This is a market which has now given you well-defined stop losses for long trade. I mean, if you are a really aggressive trader, the recent low of 77.15 is that stop loss. If you are not an aggressive trader, you are a conservative trader, then 7,800 becomes your stop loss. But this is a market in which the risk reward favors you to take intraday long positions. More so in individual stocks, even for the Nifty. For individual stocks, of course, taking a long position is not going to hurt you if you have a well-defined stop loss. My sense is that I won't be surprised if the Nifty makes a move towards 7,900 to 8,000 towards expiry. Not, of course, today, but over the next 4 days. Remember, 1 day is off before expiry, so that's something to watch out for. Now, yesterday's data, FIs sold 300 crore, not surprising. Again, DIs bought 200 crore, that's also not surprising. The data to watch yesterday was the index options data. In index options yesterday, there was 2,500 crores of buying. And if you look at the FI data, they added 16,000 longs, but they covered 35,000 shorts. And if you take a look at what happened between 7,800 to 8,000 calls, all of these shed open interest by big numbers. So essentially, you would have sold these calls, you covered these calls, and you also bought some calls at around 79.50, which is telling me that smart money is betting on an expiry around the 8,000 mark. So over the next few days, there should be some amount of short covering which takes market higher. This theory is out of the window if the Nifty breaks the low of 77.15. If that happens, maybe in today's trade or on Monday, then the market is headed lower. But as long as the Nifty is holding that, a move towards 8,000 is possible towards expiry, purely on short covering. Again, the big mistake to make would be to assume that that's the start of a new rally, which is not the case. This is a market which still, in the longer run or in the medium term, may want to test the previous bottom just to check if that is intact or not. But purely for expiry, this reward favors you to take a long position rather than a short position.
And as we were discussing, Anuj, before the show as well, the domestic cues continue to be positive. Yeah. So even as far as this, pay commission is concerned, yes, it will have an impact on the GDP, almost 0.65%, but it is less than the impact on a percentage term that we saw in 2008. So it was about 0.77% at that time. And also, I was speaking to a couple of people in the market, and they did indicate that, this will, of course, be very good for consumption. So all your auto stocks, we saw a rally yesterday in autos, in the consumer durable names. Yes. But there could be, in fact, Morgan Stanley indicated that there could be a $6 billion lift-off in consumption purely because of the kind of queue that we've got.
Yeah, I mean, that's possible. And yesterday, you could see some of these stocks, the way they were rallying. Sorry, also one more thing, again, I was talking to some of the smart people yesterday. This is a market in which, you should not only look at the index level. This is a market in which you should look at the broader market now. Almost everyone, even from FI side, you've seen such a big move towards the mid caps. Why are we seeing daily inflows into equity market from the domestic side? That's because the mid caps and small caps are making money. The mid cap index is representing a Nifty level of 8,500. It's not representing a Nifty level of 7,800. The mid cap index is only 5 or 6% of its previous high. Small caps have done well. A lot of stocks are at all-time highs. So there's a lot of money flowing into the broader market. The Nifty is somehow not telling you the right picture. The right picture right now is looking at the BSE mid cap and the BSE small cap.
Okay, so let's tell you what we've lined up for you on the show this morning. Lots of market talk is lined up with our market master for the day, Andrew Holland of Ambit Investment Advisors, Sushil Kedia, the president of the Association of Technical Market